Hello guys, and welcome to my YouTube channel once again. In today's video we're going to analyze crash 500 index. For the boom and crash traders, you need to watch this video, watch it very closely, and you're going to learn a whole lot from it. All right, so we're going to analyze it from the weekly time frame down to a much lower time frame, because there is a very high probability that you're going to make some good profit from this particular pair in the near future. Maybe not today, maybe tomorrow or next, but we just have to follow the analysis. All right, so it's going to be a kind of a top-down analysis. There are two pairs we want to analyze in this video. It's going to be this crash 500 index and jump 25 index. All right, so here on the weekly time frame, you can see the market is giving us a structure that looks like an inverse head and shoulders pattern. Like this is the left shoulder, this is the head, yeah, and this is the right shoulder. I remember when I made a video, the market was, there's a time I made a video recently, the market was somewhere around here, and I told you guys we were expecting the market on getting to the weekly, on the daily time frame. I told you guys we were expecting the market to come to somewhere here. All right, because there was a breakout here that the market never retested, that the market was going to sell to come here to do a retest, then it continues with the buys. And later I also told you guys that based on what we have here on the weekly time frame, based on what we have right here on the weekly time frame, the market sold to this level before it bought massively. Then there's a very high chance the market may want to skip that particular zone we had on the daily time frame down to this zone here before it buys. And if that happens, we are going to have an inverse head and shoulders pattern, which will signal that the market will be buying massively. So we are expecting something like this to happen in this particular pair, this market. As you can see, this is what we are expecting. All right, because the market is actually around where it's trying, is going to be forming the right shoulder. All right, the inverted right shoulder. So now all we have to do now is we have to mark out this zone. All right, let me zoom in a bit so I can mark out the zone. Oh, okay, let me try to zoom in a bit. Okay, so this is the zone. I'm expecting the market to sell right down to this level. Okay, if the market is able to sell down to this level, it's going to be some massive buys. All right, it's going to be some massive buys. And mind you, like I used to tell you, you can't just take an entry because the market has gotten to that zone. You have to wait for some confirmation before you take an entry. All right, this is the zone we are expecting the market to sell to before we start seeing some nice buys. Okay, this is where we are expecting the market to buy from. Okay, all right, now the thing is that I'm going to remove this horizontal line, which I just, sorry, this rectangle here, because as we go down the time frame, it's going to be too large. All right, so I may have to remove it, but we'll identify. I mean, I can just use a line to mark that zone. I can use a horizontal line to mark out that level. Okay, I think that's okay. That's okay there. All right, so now you can see the inverse head and shoulders pattern. So we have to go down to the daily time frame. We have to go down to the daily time frame. First of all, we've had a rejection here already. Last week's candlestick rejected this zone. As you can see, sold down to this level and rejected. Now the current week is selling towards this zone, so we want to see what's going to happen. We may have some level of some kind of consolidation on the lower time frame, and if you spot that, then you have to watch very closely. Know that the market has a very high chance of reversing. All right, just imagine you're able to spot an entry right from this zone, even with the minimum lot size. This is 2.0. With 2.0, you're making over $1,000. Meaning with 0.2, which is a minimum lot size, you should be making at least $100 profit. All right. So let's go down to the daily time frame, guys. All right. So on the daily time frame, you can see this same zone here where the market bought previously. You can see the market bought from this same zone nicely. We had some very nice buys from here, and the market broke, and kind of this bearish, you see this long wick of the bearish candlestick, this signals a kind of a retest on this zone still, and you see the consolidation around here. This is still to identify this zone, this area, as a zone in the market. And now the market, the current daily candlestick is coming towards it. So as the market, as this candlestick gets to this zone, we have to look out for the price action that is happening around here. We have to look out for, because based on what we have on the daily time frame, on the weekly time frame, we are expecting the market to buy. All right, we are expecting the market to buy. Okay, so, and if you trace to the far left, you also see the opportunities where the market had bought from this zone before. All right, so now let's go down to the 4 hourly time frame. Let's go to the 4 hourly time frame to still see what is happening right there. On the 4 hourly time frame, as you can see, wow, yeah, one of my students shared a setup here that was like 2 nights ago. I was asleep. Then when I woke up, the market already gone far. I'm not sure if he actually took the trade because he found this it would have been massive sales, would have made so much profit. He saw this exact setup. You can see the market broke and retested, and I saw the screenshot he took was when the market was somewhere around here. You can see the massive sales. Market sold massively. Imagine taking this trade on on this 4 hourly time frame. Even if you're targeting this low here, you'll make so much profit. All right. Anyway, that's aside. So you can see there was a pullback at this point. There was a pullback at this point. The whole of this was a pullback. Then the market continued selling, and you see the first 4 hourly candlestick that went down here rejected closed bullish. The second one is still doing what it can do, but trust me, do not be carried away by the things you are seeing around here. All right, because the market may not reverse from here. All right, so before you think of taking any entry, it must be that the market has gotten to the zone you expect it to get to. Always be patient enough. You've already marked a zone now, and you expect that market would reverse on getting to that zone. If the market doesn't get to that zone, do not be in a hurry to take an entry, because whatever you see here might look like the market is ready to reverse. Then you take an entry, see it moves up a bit, the next thing, and mind you, this is in spikes, and if you want to buy, meaning you are trading against spike, one long spike will just come and blow up your account or make you lose so much money, and you won't be happy about that. So all you have to do is to be patient enough for the market to get to your zone. All right, let the market get to your zone. As the market gets to your zone, what you have to do is to, one moment guys, I'm trying to get that reset. Okay, good. Free chat. Okay, so as the market gets into your zone, what you have to do is to watch out for the price action activity. It might be that from where the market currently is, it may start forming, creating lower highs and lower highs and lower lows, even on the 1 hourly time frame or even on the 15 minutes time frame till it gets to this zone. If you want to be conservative, guys, you have to wait for a change of character. Then you take the entry and take the buys. All right, or if you want to be aggressive, you can just wait until as the market gets to this zone, you take an entry and put a stop loss just below it. Know that you're trading against spikes, then you enjoy the movement. All right, just enjoy the movement to the upside, make your profit. But I prefer to be conservative because it makes you enter the trade with peace of mind. Then you'll be risking very less or very low. All right, you'll be risking very small amount of money and you're making so much profit. You understand? I hope you understand what I'm trying to explain here, guys. It's very simple. It's very simple. Always try to wait for the market to get to your zone first. Once the market gets to your zone, the next thing is wait for a change of character. Now we have a high here, we have a low. This is a lower low, a lower high. The market maybe it wants to create a lower low at this point. Then it will maybe buy to create a lower high, then sell down to create a lower low, something like that. Then finally it create a change of character. Then you wait for a pullback, you take an entry from here, and you see the market buying. You make so much profit if you follow this approach, guys. It's one of the best approach that can help you succeed in trading. All right, so the video is already long. Let me quickly get into the next pair, which I want to show you something. Mind you, this pair is not too volatile, it's just moderately volatile. So it can, if you have a small account, you can still trade. Even with the $10 account, you can trade with the minimum lot size of 0.2, and then you'll be risking very small. Ensure your stop loss is not too far because you're trading against spikes. All right, and also make sure it is reasonable. Do not just don't say because I say the stop loss shouldn't be too much, then you like almost not putting a stop loss. Just make it too close. At the end, a little spike down kicks you out, meanwhile the market wants to buy. So it has to be reasonable. It has to be moderate. Just be considerate when you are placing your stop loss. All right, losses must come as long as trading is concerned. You must lose some trades, but you must remain profitable as long as you are applying a very good approach and strategy. All right, let's quickly look at jump 25 index. Let's quickly look at jump 25 index. Okay, so this pair, I lost some money yesterday on this particular pair because of it's part of the business. All right, it's part of the business. The market has a way of making you feel like you know nothing. That is one thing about the market, but you need to stay strong. just stick to what you understand. Do not allow the little losses make you feel you know nothing, or you need to start looking for another strategy. That is the beginning of your losses, of more losses for you in trading. All right. So yesterday on the 15 minutes time frame, although you can see the market has been bullish, then I noticed it had bought to somewhere here. This looks like a resistance level. All right. Then the market started consolidating because of this consolidation here. Then I looked at this level here at this point, and if I extend this, you will see. So I was expecting the market to reverse from here. All right, so on the market, when it got to that place, I noticed that there was on the lower time frame there was a pullback. It was creating lower highs and lower lows. Let's just quickly get to the let me remove this first. Let's quickly get to the 1 hourly time frame. Okay, so the market was creating higher highs and higher lows. At this point, this is a high, this is a low, then this is a higher high at this point. So if the market can just create a change of character at this point, they will be experiencing some nice. We will wait for a pullback, then enter with to make some good profit for the sales. But as you can see, the market successfully created this change of character. At this point, there was a change of character here. Then the next thing was for the market to consolidate. It started consolidating, then later moved to this zone. So I entered some trades at this point, but it started selling nicely, and very soon, before I could realize, it started buying and it kicked me out. I entered about two times because I found another opportunity to re-enter. It still kicked me out. Then that was all. So I lost some funds on this particular pair yesterday. So, but one thing I failed to do, which I want you guys to always take note of. As a trader, sometimes you do not completely blame the market. Sometimes look at what is happening on different time frames. It might give you an idea of what you actually missed, what you should have done. All right. So since I was focusing basically on this particular time frame, the 4 hourly time frame and the 15 minutes time frame at this, so and the 1 hourly time frame, I later went to the daily time frame. So when I went to the daily time frame, I noticed that there was a kind of a breakout that was not yet successful. Like what the market was doing was this. Like this week here was what the market did. It bought above this zone. Then I understood that there's no guarantee that the market can just continue buying. Maybe it just wants to drop a week. It wants to do a kind of a liquidity sweep around here. Once it sweeps this high, then it pulls back, and you can see that's what happened. The market just bought because from what happened on the 4 hourly time frame, you see the way the market broke and closed above this zone, and then even on the 1 hourly time frame, it can make you feel okay. The market actually wants to buy. It can make you feel okay. The market actually wants to buy, even up to here. Like this was a retest. You would see this to be a retest, a successful breakout and a retest here. Then the market would want to buy. Unknown to you that on the daily time frame, the market is a daily time frame structure. Then the market then you have to wait to see how the daily time frame closes. So I didn't notice that. All right, so that was the reason I lost. It's part of the business. There must be losses, like I told you guys. So I lost on this pair. As you can see now, the market is selling massively. Market sold massively. If I had found this opportunity to re-enter again, people would have recovered the losses, maybe from this pair, although I've recovered from other pairs that I traded yesterday. All right, so imagine this. So that's just for this particular how I lost trades on this pair. But now, if you go to the daily time frame, you will see that what we are having, what the market did yesterday was also for some good. Of course, now you can see we have this to be a lower high, a lower low. This is a lower high, and this is a lower low. Then the market bought up to this level here. So what I'm seeing here is a pullback. I'm seeing a pullback right here, guys. What the market is doing here, I'm seeing that's a pullback. So I'm expecting the market to nicely sell to maybe somewhere around here, so it can start buying again, because I'm seeing an inverted head and shoulder. That's how you guys call it. I'm seeing an inverted head and shoulders pattern right here, which indicates the market wants to buy. Okay, so if this market sells to this zone, we'll be looking out for some buying opportunities. All right, go to a lower time frame, look for some price action activities or patterns that indicate the market will be buying. Then you take an entry from there. And also, if you check on the 4 hourly time frame, we can draw a trend line like you saw before I removed it. You see there was a trend line somewhere here. Okay, you can see there's a trend line there. I mean, the market might respect this trend line. So all we are expecting the market to possibly do is this. The market will possibly sell down to this zone. Then it will then buy. This is what I'm expecting the market to do. All right, this is what I'm expecting the market to do from this zone. Okay, so let's just keep an eye on it. Let's just keep an eye on it. Okay, although what we are having now can make us look at the market as there's a change of character. So even if this is actually a change of character, I mean, what we have here at this point is a change of character here. If this is a change of character, so you can still trade this as the pullback. You can trade this as a pullback. Market getting here gives you that confirmation it's going to buy. You can trade it as a pullback, buy up to maybe somewhere here. Then you take your profit and step out of the market. All right. So just keep an eye on these two pairs and see. Let's see how it goes. All right. Just keep an eye on these two pairs. Let's see how it goes. This video is already too long, guys. The mentorship for the October group, yeah, started yesterday, and there is still a window of an opportunity for anybody who is interested. So all you have to do is to reach out to me. Click on the link in the description of this video. Takes you to my Telegram channel. From there you find my direct contact. Reach out to me, then I'll let you know what you're going to do. All right. Then for private mentorship, I'm still available for that at the moment. So quickly reach out to me. If you like this video, share it in the comment section. Subscribe to this YouTube channel. I will see you guys in my next video. Stay blessed. Peace out.